Let's go live to the Treasurer, Jim Chalmers, speaking in Canberra.
Okay, everyone ready to go? Our economy grew in the March quarter, but slowly. Just 0.2% in the March quarter and 1.3% through the year. Our economy continues to grow despite very substantial global headwinds. We saw those set out by the OECD overnight and also in the commentary in the Reserve Bank minutes that were released yesterday. There wasn't a lot of growth in March, but what growth there was private sector led, and that's an encouraging sign. With all of the uncertainty in the world, any growth is a decent outcome. Even modest growth is welcome in these global economic circumstances. Now, growth was weaker than expected because public spending came off in the quarter, and we also saw the impact of natural disasters and global volatility on exports, but also on the economy more broadly. Productivity was flat again, and I'll come back to that towards the end. But even in this environment, even in this difficult global context, there were a couple of very positive developments that I wanted to talk about today with you before I take your questions. And those two positive developments are around private demand and also the continuing recovery in real disposable incomes. So on the first one, the private sector is stepping up now as the public sector takes a step back. All of the growth in the March quarter was from the private sector, and that's a good thing. That private growth was broad. Consumption grew a bit more weakly than we were anticipating, but it grew. Business investment made a contribution, or it was flat, and dwellings grew as well. I think when it comes to new dwellings investment, I think we're seeing the strongest growth from memory in about 4 years. And so the private economy did all of the heavy lifting in this March quarter. The second thing which was pleasing in this data is that there was quite solid growth in real incomes per capita. And you know that this is the chosen measure of living standards adopted by really all the participants in this national economic conversation. Real incomes per capita and living standards, we saw solid growth once again. The measure of real incomes per capita was up 1.1% in the quarter. That was the third consecutive quarter of growth. Now remember, real incomes were falling 1.7% when we came to office, and they're now up 1.7% through the year. And this comes from the combination of moderating inflation, solid wages growth, and the tax cuts, which are all central features of our economic plan, combined with lower interest rates as well. So if you think about it this way, in the second half of last year, real incomes in Australia grew faster than the OECD average and almost twice the G7 average. That is a welcome development. When we came to office, real incomes per person were falling sharply, and we've been able to get them growing again, and we saw that again in this data. We also saw that the prices measure fell again in these numbers. It's the lowest in 3 years now, which more or less mirrors the moderation we've seen in the CPI. The wages share rose again. It means wages share of income is almost 54%, which is up from less than 50% when we came to office. And it's also worth remembering that only a tiny bit of the interest rate cuts which began in February are captured in this data. So if you think about the full effect of the now 2 interest rate cuts that we've got flowing in our economy, we expect that to add about $10 billion to household balance sheets over a year and about $6 billion to business balance sheets over a year as well. So there's a little bit of that captured in these March national accounts, but overwhelmingly the benefit of those 2 interest rate cuts will be captured in subsequent quarters, remembering that this is the March quarter, and so a very backward-looking measure. And so it's clear from this data that in the March quarter, growth was subdued in our economy. Also clear that our economy is not productive enough. But I also wanted to offer this perspective. When you look at these numbers today, no major advanced economy has our combination of unemployment in the low 4s, inflation below 2.5%, and 3 years of continuous growth. That 0.2% in the quarter, the 1.3% through the year should be seen in the context of most of our peers in the OECD have had negative quarters. A number of them have had multiple negative quarters and recessions. What we've been able to do collectively as Australians is to get inflation down without paying for that with negative quarters of growth or substantially higher unemployment. And because of that progress, the Reserve Bank has had the confidence to cut interest rates twice in the course of 3 months this year. So we are well placed and we are well prepared to deal with what is coming at us from around the world, at the same time as we do what we can to make our economy more productive and our budget more sustainable over time.